from the acquisition of land to the launch of the project, with all the regulations and approvals, it takes 1 year, which means that you are putting the capital to buy the land, and then you're going to develop on that one. That 1 year is a really, really a difficult period for a developer, because there is no money coming in, and whereas the cost of money is piling up, making the product expensive. And in end of the day, it all gets loaded onto the product.
Welcome to the Blue Circle, everyone, and thank you all for joining in today. It's such a big privilege and a pleasure to reconnect with everyone, our distinguished panelists who are handpicked because of the think input and the rich experience that they bring in. And thank you to our distinguished audience for joining us. We've received over 150 registrations, most of whom are COC, XOs, and senior leaders. Many of our members and repeat visitors to our webinars, which is very encouraging and motivates us to provide higher levels of dialogue through the online modes as well. So for those of you who are new with us today, the Blue Circle is an exclusive community and ecosystem which is curated for business leaders across 4 sectors, which are real estate, healthcare, e-mobility, and energy. We've also added 2 new sectors very recently, which are aerospace and defense and logistics. We also present socioeconomic insights, which ultimately determine the evolving complexion of the market. In response to the COVID challenge, the Blue Circle has also accentuated its digital presence. One of the many modes we employ is our weekly webinar series and our digital publication. And in addition to this, and you'll be happy to know that we're very soon launching an exclusive digital platform curated for leaders, something like the LinkedIn for leaders across these sectors, wherein we will present them with the opportunity for connecting with people just like them, also house high quality curated content, have such meaningful conversations, and give access to business opportunities across these sectors. So those leaders who are interested, please do write to us. We've already begun our selective outreach and have over 3,000 leaders who signed up in the last 4 to 6 months. Today, we're privileged to have distinguished industry leaders who've joined in for the Real Estate Circle's discussion. They're here to discuss affordable housing outlook in 2021, the drivers, speed breakers, and emerging dynamics. Our session's chair and moderator is Mr. G. Raghavan, founding partner, Next Practice, Growth Partners, former CEO, Bhartiya Urban, NIIT, Ingram Micro, Carrier, Independent Director, Amrutanjan Healthcare, and Director, Blue Circle. Welcome, sir. And now I would request you to please begin the session and introduce the other panelists as well.
Thank you, Siddharth. Thank you, Blue Circle, for the opportunity. I'm very happy that a topic like affordable housing today is having a complementary set of experts who are going to be speaking from different perspectives so that we as listeners and the audience as listeners can walk away with putting together a comprehensive picture about the subject. I thank everyone for joining today, and let me get started by introducing the speakers today. First is Mr. Ashish Karamchandani. He is currently the president of the Nudge Foundation. Before this, from 1993 to 2012, he was with the Monitor Group, a strategy consulting firm started by Professor Michael Porter. As part of this, he set up Monitor Inclusive Markets that helped catalyze the low-income housing market in India. Ashish combines a strong market perspective with the social lens of the needs of low-income customers. So thank you very much, Ashish, for joining. And we are looking forward to a lot of value that you're going to be bringing from your years of experience in this field. Thank you. Moving to the next panelist, Mr. Jaime P. Luque. He is the Associate Professor of Economics at ESCP Business School, Madrid campus, where he holds the Monaco Real Estate Technology Innovation Chair. He is the recipient of the 2017 Ideas Worth Teaching Award by the Aspen Institute Business and Society Program for his educational innovations to address affordable housing development. Welcome, Jaime.
Thank you very much. I'm happy to be here.
Our next panelist is Mr. S. Mallanna. He's an alumnus of the Harvard Business School. He is a CEO. He was a CEO for Bhartiya Urban. He is currently the Chief Operating Officer for Bhartiya Urban, a large real estate development out of Bangalore. He has achieved career success in profitable real estate development startups, business scaling, PE fundraising, and real estate asset investment and management. He has worked on and created business models for the affordable housing market with forecasted margin levels that are attractive. So you have from Mallanna another viewpoint from a developer and his own personal experience of developing models from a supply side perspective. Mallanna, welcome.
Glad to be here. Thank you, Raghavan.
So as we get into this conversation about affordable housing, many of you could be wondering what is affordable housing as we are going to be speaking about today. There are multiple definitions, but I would like to lean on one definition so that we are able to look at it and put it behind us and then concentrate on the larger picture of our conversation today. Basically, you've got the economically weaker sections defined as less than 1.5 lakh rupees per year. And the affordable housing has been considered from 2 points of view. One is the size of the unit, as well as what is the cost of the unit as expressed in terms of EMI. So for the EWS segment, it is put as less than 300 square meters of carpet area with 30 to 40% of EMI to monthly income ratio. The same numbers for low income group as defined between 1.5 and 3 lakh rupees is put between 300 to 600 square meters of carpet area with 30 to 40% EMI to monthly income. For the higher income group, higher income as defined between 3 lakh rupees to 10 lakh rupees per year, the area is considered to be between 600 and 1200 square meters, and the affordability is considered at 5.1 times the annual income. Now, these are all definitions which have been widely referred to both by KPMG, I think developed by KPMG, and also referred to by CREDAI. So broadly speaking, we understand the kind of segments of the society for which we are all going to talk about resolving one of the most basic requirements, namely housing. Before, instead of taking more time, I'm going to let the panelists come in and give their perspective on this very, very important topic. I'm going to first request Ashish to come and give his perspectives on this topic. Ashish, over to you, Ashish.
Thank you. First of all, I want to just thank the Blue Circle Group for giving me this opportunity to interact with a group of CEOs and CXO level people interested in this space. Thank you, and good to meet all of you in the audience. I'm actually going to start off by expanding on the point that Mr. Raghavan made about defining the segment, because I think that's really important. If you think about urban India, which is really the area we're all talking about, the top 15-20% of the market is actually served very well right now by the developer and the housing finance industry. And that's actually above all the levels that Mr. Raghavan spoke about. That's basically housing which costs more than 20 lakhs or $30,000. And it typically has incomes of people who are about 75,000 rupees a month and above. So that is basically closer to your 10 lakhs and above, if you want to think of it from an annual. So it's absolutely clear that market is being served. We don't need to worry about it. If you take the rest of the market, I would actually break that up into the LIG exactly as Mr. Raghavan has done and the EWS. If you look at the LIG, that's the one which is most interesting because it is actually currently a lot of them are living in rental housing, paying 25 to 30% of their monthly income as rent. And they can actually afford commercial housing at commercial rates. The problem is inadequate supply. Today, financing is available, and I'll talk more about that. But I just want to say that that's the interesting market because it is commercially viable. And then there is the EWS, which is earning, as again, Mr. Raghavan put it, below your 1.5 lakhs, frankly, where commercial viability is not there and significant government support has to be given. And the big question is, how does government support this effectively? Government has tried to do this for 40 years now. There are over 1 million units actually produced which are not being used. So there's a big issue about the how on the government part. And I'm hoping people like Jaime will actually bring some insight there. So I just want to first frame the market. The second thing I want to just talk about is my area of work, which has been in that very same low income segment. And while we've done some work on the supply side as part of monitoring inclusive markets, a big area of focus was financing. Because end of the day, that's the liquid which keeps things growing. And we were able to actually catalyze a market to finance informal sector customers. So these are customers who have no documentation of income. Today, anywhere in urban India, there are over 26 housing finance companies actually financing informal sector customers for these kinds of low income housing. Over $5 billion of loans have been given. So that's just my area of interest and expertise. The third thing I want to just very quickly mention is the social impact. I won't go into it, but there are two big dimensions of social impact here. One is actually the ownership of a house, which is an important asset which puts you onto a long-term journey of prosperity, both because it frees up your rental income, but also because of the asset it provides you. The second, the psychological part, empowerment of a person who's no longer at the beck and call of a landlord, but actually has the independence to stand on their own feet, is part of a society. And I can go into more details on that if people want. So I just wanted to give these three pieces as sort of the introduction, framing of the market, my area of focus, which is the low income group, and the social impact.
Thank you very much, Ashish. That's a fantastic opening to the whole topic. I think you've given it a complete roundup of what the dimensions could be. Really appreciate it. Now, I would like to move to Jaime. You're from Madrid and you've been working on the science behind it, if I can say that. So it'll be very, very interesting for the listeners to hear your views as opening comments.
Well, first of all, again, thank you so much for this invitation. It's really exciting. It's a very important topic that we are addressing here today. It's probably topic number one in public policy. I can provide perspectives from the United States, where I was working before, the University of Wisconsin-Madison, the real estate department, as well as in Europe, where I'm based now. This has been my topic for several years where I've been working, and I would love to be able to contribute to the debate by clarifying what we already know scientifically from research about like different types of public policies to try to alleviate affordable housing. But before that, let me just put in a context like some of the key points that has been raised already. One is to distinguish between rental housing versus owner-occupied housing. We want to discuss about that because there are different types of public policies that target one or the other. Second one, it's the definition of housing affordability. So the definition that is more accepted in the United States, it's that housing is affordable if the household spends less than 30% of his monthly income. I will provide some statistics based on that definition. Everything that goes above that rule of thumb, it's said to be unaffordable. And just to give you some examples of what is going around in the world, we have countries such as Greece, Spain, United States, United Kingdom, where the average household spends between 50 and 60% of his monthly income in rents. And there are other countries in Europe, such as France, and Germany, and Hungary, where like the percentage is about 20% for the average household. Of course, there is variation across cities. But just to put you an example of which countries are struggling more, United States, United Kingdom, and France in some parts. Spain is a country that is really struggling. So I would love to bring you some light on these issues. And just to say that what I said before, the issue number one in public policy in elections for major of big cities such as Paris and London was always housing, has been always housing the last year. And just to say that in the United States, after the great financial crisis of 2008, the index of housing affordability really increased, saying that households became more burdened in terms of paying the rents. And this trend didn't basically improve much. So we are living in times where there is a lot of unaffordability in housing. And just to conclude, I also would like to talk a little bit about the difference between low-income housing households versus like a very, very poor households, such as homeless people. So we want to distinguish between those that like poverty versus the working class that they have a job, but they struggle to pay their rents. This is a very important distinction as well. Just to conclude, in the United States, you have among the very, very poor, which are the homeless people, you have more than 500,000 people that are homeless people. The approach to them is different than the approach to the working class. And some of the social impacts that have been mentioned also before can be targeted in the forms of housing first, which means that we recognize, and there are studies that we know that getting access to housing, besides all that could happen with that specific household, it's very important to give hope to that family or to that person. So in this conversation, I would love to contribute to the understanding of which public policies help and which others are basically against housing affordability. Thank you.
Thank you, Jaime. I think you set it up very nicely. I think you have brought about the whole idea of rental versus the owned housing stuff, as well as you have really brought out another very, very important social issue, namely extremely very poor, households. We talked about even the lower income group or economically weaker sections. We're talking about a certain level of income. So you're talking about what happens to another deeper pyramid with lot less income than even what we're defined. So it's an important issue. It'll be very interesting to hear from you what kind of work that has been done when we go around the conversations. It'll be very good. So I'm going to turn it over to a third angle for this whole conversation from a developer perspective. Mr. Mallanna, you've got a lot of experience in terms of developing homes for people, homes and all other kinds of assets. So putting on the lens of a developer, so what kind of supply side issues do you face and so on? So would you like to give us a little bit of a high overview to begin with from a developer's pair of eyes?
Yeah, thank you, Raghavan. Thank you, Blue Circle, for having me here. Building upon what Raghavan spoke about, the categorization of affordable housing, and what Ashish spoke about, the income group and the HFC's Housing Finance Corporation and the financing, and also Jaime spoke about the issues with regards to the rental income and other things. So I've been in real estate development for a long time, and this affordable housing has been quite an intriguing one, to say the least. So I decided that take a deep dive into it and study it and try to build a model for India and see that whether this affordable housing can be, the juggernaut of that could be solved and be taken forward as a business. And which means that affordable housing is not a charity work, and it should actually come within the parameters of business, which is investment and profitability. So let's look at India. We have got 54 cities with more than a million population, and among which the 7 cities are mega cities with more than 10 million people population. So there are more than 1.5 crore people with the income of 5 lakhs rupees to 9 lakhs rupees or 5 lakhs rupees to 10 lakhs rupees, which means that their income is at around 60,000 rupees per month. So as Ashish was talking about, some 25 to 30% of their income, if they're reserving it for their housing purposes, which means that they can pay out monthly 15 to 18,000 rupees. Which means that currently, if you look at urban India of any bigger city or a secondary city, the rentals that they're paying is somewhere between 12 to 15,000 rupees. What does it really mean? That means a definition of affordability arises here. Definition of affordability here is about a replacement value. A replacement value is if a family is paying certain amount of rent, and if we are able to get a house for the same amount of rent, which is rent is equal to EMI, which means that we have solved the problem of the affordable housing. What it really boils down to in real numbers is 60,000 rupees per month will come to around 25-30% of that will translate to around 16 to 18,000 rupees per month. Can we develop a house where the EMI is 16 to 18,000 rupees? If you go back and extrapolate that to the value of a 2-bedroom unit, and that should be around 20 lakhs rupees. If you build a house for 20 lakhs rupees, As per the RBI guidelines, 20% of the money has to be brought by the customer, that is 2 lakhs rupees, 18 lakhs rupees is there. Under credit link subsidy scheme of the Pradhan Mantri Awas Yojana PMAY, you get 2.67 lakhs rupees of subsidy, which means that your total loan burden is 15.33 lakhs. 15.33 lakhs at 8 or 9%, and Ashish would know better what could be the interest rate on the housing finance corporations. So you're roughly looking at 16 to 18,000 rupees monthly EMI. So there you go. That is, the rent is equal to EMI. Is that achievable? And probably that's what we are going to discuss as we go forward, and how the different models can be looked at as we go forward.
Thank you, Mallanna. That kind of, again, brings another dimension of defining the issue. What you're saying is 16, 17,000 rupees rent, can that become an EMI, leading to the ownership of the apartment or the house to the person who's dwelling in it? So it's a very interesting, pillar to talk about in terms of the ownership of the housing. So thank you very much for this perspective. So actually, we should really try to understand some of the market-based solutions, right? I think we are all talking about roughly saying 30 to 40% of the monthly income, if it is spent on EMI equivalent, then we are seeing the feasibility of housing for that particular person. So Ashish, you've done a lot of work, both from the monitor group as well as currently dealing with the society at large from the Nudge Foundation. So in your opinion, what could be some of the market-based solutions to bridge this gap? What I understand is that if you look at a study in 2030, the number of housing dwellings that is required, as I saw in a McKinsey study, which puts the number around 48 million houses are required by 2030. Now, obviously, there is a long way to go in terms of fulfilling this demand. Forget about the economic models, forget about the income, even in physical supply readiness, there's a lot of things. So in your opinion, what could be the market-based solutions to this demand-supply gap? Ashish.
Sure. So let me start off with actually just building on what's been said so far. We need to separate out the market from the top of the market, which is being currently served by developers, the low-income group and MIG group, Raghavan, that you mentioned, which is a potential to be commercially viable, and the EWS, which frankly needs significant subsidy. So if we come down to the LIG and the MIG, especially the MIG, which is earning between 3 lakhs and 10 lakhs, and also the next group, which is 10 to 20, sorry, the 3 to 10 lakhs is right, which has an affordability of housing up to 20 lakhs. So it's basically housing which costs 18 lakhs to 20 lakhs. That's the most interesting. Because commercially, actually, even today, if you look at what prices of housing is in the market, you can get housing between 2,600 rupees a square foot and 3,500 rupees a square foot. So going at the lower end of that, we're saying that a 300 square foot house could be available for 7.5 lakhs. Which means if you put in 20% down, it's a 6 lakh loan, which means you're paying about 7,000-8,000. So technically, just from a pure cost perspective, that house is feasible. Now, there are two parts to this. One is financing for the house. The second is the supply of the house. On the financing side, historically, the Indian market has only supported people who have jobs. So HDFC built its back on the fact that you could use something called a Form 16 to assess a person's income. You knew they had a provident fund, so they had a security in case something went wrong. And because they were working with a large company, they could not be thrown out. And that is really what fueled our housing market, I would say, until about 2010, from almost 1990. What's interesting is in the last 5 years, there has been a growth of a whole new sector of housing finance companies called affordable housing finance companies, which actually don't just look at your salary. They realize that many people have informal sector income, which is easy to assess. And I can go into more details if people want. The bigger thing is you need security. If something goes wrong, can you get that house back? So as long as the house has a clear title, they're willing to give a loan. And today they have already given $5 billion worth of loans, 300,000 units. So I don't think we need to study whether that's feasible. That is happening in this country across urban India. The problem is actually on the supply side. The developers have been so interested in feeding off the top of the market that they've really not gone down. technically it is viable, but there are very practical issues. So for example, most larger developers want to have a significant number of units. They're not interested in doing 100 units of 300 square feet. Unless the overall thing would be 2,000 units of 300 square feet, they're not interested in 300 square foot units. And the problem then becomes you need 10 acres. If you're looking at 10 acres, you can't get it where people want. So people have three very clear criteria what they want. They want something which is relatively within striking distance, which is about an hour, hour and a half. They need public transport, because even if the husband has a two-wheeler, the daughter may need to come to college. So they need connection to public transport. And the third equally important thing is they need access to an English medium school for their kids. Most of the people in this age group have kids in the ages of 0 to 15, and one of those kids is going to school and they need private schools. So when you put these constraints of access to the city through public transport, hour and a half away maximum, smaller cities, hour 40 minutes, Mumbai, hour and a half, and the public school, most large projects find it difficult to meet these needs. So you look at the Mahindra projects, the Tata projects, all of them have stopped selling and working because they can't find the land. There's a group of small developers who are able to do this, but the problem is they don't have access to credit. Old days, you put up a project, you put up a board saying housing, and everybody signed up outside and gave a deposit. Today, nobody trusts the developers. So our big problem in the market-based solutions world, which is that LIG, MIG is no longer financing for the customer, it is actually supply of housing. For small developers, financing for them. For larger developers, not frankly interesting. Are there other models we need to explore there? I'm sure. But that would be my sort of quick answer to the problem of low-income housing and middle-income housing on the ownership side. I think Jaime's point about rental is very important. And there the fundamental problem is when you look in the Indian market and you see the rent you get, it is very low compared to the cost of the house. So from a financial perspective, it doesn't make financial sense. Your rent is not even covering your servicing debt cost of a house. So all you're doing is betting on the upside of the value of the house. Let me not start, I'll go on to another half an hour. So let me stop and say on the ownership side, the supply is a problem. On the rental side, fundamental economics of what people are paying is a barrier.
That's very good, Ashish. That's a very, very good point. It's extremely heartening to know that there are many housing financing companies which have advanced more than $5 billion worth of loans to these very people who are in the informal sector. So that's a very, very interesting point that you made. And I am not sure that not very many people are aware of it. So that's a good point. Thank you so much for making it. I'm going to come around to you later. One of the interesting things which you touched upon, I would like you to think about this is the living. Affordable housing for the lowest income group is just not only about housing and real estate and affordability and so on. There is a whole social element involved in it, some of which you touched in terms of the proximity to school and the transport and so on and so forth. The third dimension is how do they live? If you look at the homes of the rich or even higher income group people, how do the homes look like? What kind of social amenities they have? And when we talk about 20 lakhs and 17.5 lakhs, very, very tight budgets, are we creative enough to provide social dwelling spaces, community spaces? And that's such an integral part of life as we know it. And should we be, just because the costs are low, deprive them of being, giving them a happy life? So I would like you to think, I'm sure that you thought about this. When we come around to you, it would be nice to hear your perspective on it. So I'm going to go to Jaime. So Jaime, can you talk to what are some of the financial models that seem to work around the world? When we say financing models, we talk about financing models from the consumer perspective, as well as financing models from the supply side, developer perspective. And are there specific interventions that countries around the world have done? And what, if any of them, have been very successful? Can you talk to us about it?
Yeah, sure. It's a big topic and has been written a lot about that. I mean, first of all, I again want to distinguish between rental housing versus owner-occupied housing, because it's the financing and the access to housing, of course, is different. So what governments have approached, and if I can simplify things about it, I would say there are 4 public policies that accomplish all spectrum. We can play with prices, which is rent controls. We put a cap on prices. This is something that has been adopted in Paris, New York, Los Angeles, London, Barcelona. Also, we have, we can manipulate the demand, which is the demand here is the tenant or the household who's going to buy a house. So the government is going to give them money. We call them a subsidy or a voucher. Also, we can manipulate the supply side, which is here the developers, in the sense that we are going to incentivize the developers to develop in a very specific place, where Ashish was mentioning, like we want developments where there is public transportation, very good schools and so on, like at least some kind of mixed neighborhood where these kind of positive externalities of other children playing around with maybe poor people, which we know. This is something that appears in what we call a scoring table. So developers make proposals, they compete against each other for those subsidies. And those that get the subsidy
are lost you for the last 30 seconds.
You lost me.
We lost you. So would you mind repeating what you said last?
Yeah, I was saying we can manipulate prices, we can manipulate the demand, which is the vouchers. We can manipulate the supply, which is the developers, in the sense that we're going to incentivize them. And I was saying that developers are going to compete for those subsidies. And what Ashish was mentioning, that we want like developments, residential developments in places where there are like good public schools, where we have good public transportation, all that. Developers really need to make a very good proposal to be the winners and get the money. That money, if I have time later, I will explain how these mechanisms work. It's what really brings down the cost to a developer. It's like free money. And in the US, I'm going to mention there are 2 programs which are very powerful. One is the low-income housing tax credit, very powerful from histories in the 70s. And the other one is the tax increment financing. Again, if you think I'm good with time, I can go in detail with those programs, because they are very, very powerful tools to promote housing. And the point here is that we want to bring down the developer's cost, because in a competitive world where there are many developers that compete with each other, trying to basically get the best spot and so on, all that at the very end, what we see is that price kind of equals cost. So the margin for profit is going to narrow a lot once you have enough competition. So what we really want from a policy perspective is to bring down developers' costs, because this is going to bring down at the end the user's price, and which is a very controversial policy. But I will argue that is the most effective one. So I was talking about rent control, prices, housing demand vouchers, supply side subsidies to developers, and the 4th one is what we call zoning. So basically, you have the possibility to zone different specific lands. So a good example is if you have agricultural land, we're going to transform it into residential. We increase land, it's become more abundant, land price goes down, the developer sees his overall cost going down, so prices go down. So we have these 4 interventions, of which, responding to your questions, specific to the financing, and we have to look at either giving money to the household to buy a house, or giving money to the households to rent a house, we call it voucher, or giving the money to the developer. So we're going to modify the capital structure that I can comment if you want at any point. So what remains for me to explain, and I can explain that later, not to monopolize the time, is how those supply side policies operate. In particular, TIF and LIHTC in the United States, they're very powerful tools.
Thank you, Jaime. That's very useful. But I'm going to have one quick follow-through question before I turn to Mallanna. If you look at the Pradhan Mantri Awas Yojana urban scheme in India, the scheme is highly devised to bring the benefits to the actual buyer. So it is neither biased towards making it easy for the developer or is making it easy for the financier. Most of the benefits go either in terms of interest subsidy or the capital subsidy to the individuals concerned. Other examples which are much more direct to the developer side or the consumer or the developer side or the financing institution side that you've seen models in the rest of the countries?
Yeah, so it's a great question, and thank you for this time, because I think it's probably the most important thing I would say today. Giving the money to the household, we have one example. I'm going to start with that. We have a very good example in the United Kingdom. It's the program Help to Buy. So money goes directly to the household, like about 20% of the equity it's given by the government. There is a very recent study by London School of Economics, some authors that work there, colleagues of mine, and they found that this program ends up increasing prices. So this is the free market. So we give money to houses that want to buy houses, and the market is going to capture the surplus through prices. So market's clear. So at the end, we make housing less affordable. Those that have the benefit that they get access to those grants from the government, they are better off, that's for sure. But the government cannot buy houses for everybody in the country. It goes bankrupt. So at the end, what you are making is worse off the similar people that don't get access to that financing. And it's a very, very negative result on the demand side public policies.
Just hold your thought. I think this is I'm going to come around to you once again, but this is a very, very interesting point that you mentioned, namely enabling the end consumers buy either through interest subsidy or capital subsidy has an indirect way of increasing the cost of the assets. It's a very interesting statement that you're making. I'm going to go around later on after speaking to Mallanna. When I go back to Ashish, I'm going to speak to him about his perspectives as to what could be the implications of that in our country from the Pradhan Mantri. Mallanna, I think what Ashish alluded to is he clearly segmented it in three pieces. One is what we call as the higher income group. He says that segment is clearly addressed by the developers of the country. They're quite busy addressing the market. Second is the middle income group, where in his opinion, the 20 lakhs kind of a price tag for a housing is attractive enough or viable enough for the developers to go into it. Maybe it is not attractive enough. The third piece is the really low income group, where the cost of the house and the developer's cost are not tying down. So therefore, it is creating an equation, a problem of an equation over there. So can you speak in from a developer perspective, particularly about the lower income group in the 18, 20 lakhs thing? Why don't developers want to jump into this large segment?
Yeah, so let's pick it up from where we spoke about the EWS and LIG. The EWS and LIG, now we are saying 30 square meters is for the EWS and 60 square meters for the LIG. That translates to roughly 330 square feet and 660 square feet unit. So 330 square feet means it's a single bedroom house, and 660 means it's a two bedroom house. So when we look at this 330 and 660, so now we already have the constraint from the demand side. The demand says I cannot pay more than 15, 16 lakhs rupees for a two bedroom house as EMI, and maybe 8,000 or 9,000 or 10,000 rupees for a single bedroom house, which means that my boundary has already been defined. I need to be now doing it the reversal. If you really look at the way the developers today, as developers, we are organized. A piece of land parcel comes to our office, and we sit on that land parcel and we look at it, what needs to be built, what we can build there, and the how it can be marketed, which means the piece of land defined the business that what we are going to do, right? But whereas here we already know what needs to be built, and then we need to take this one to the appropriate land to build that within the parameters. For what are the parameters, I'll come to that in a minute. For example, if you want to build a 660 square feet house and where the EMI is 15,000 or 16,000, that means you are selling it for 20 lakhs rupees, 19 to 20 lakhs rupees. 19 to 20 lakhs rupees when you're selling, you should be making a margin of 16 to 18%, which means 550 rupees to 600 rupees per square feet is gone, which means that now you're back to around 16 lakhs rupees for within which you are supposed to build a house which is acceptable to the customer. What is a house that is acceptable to the customer? I go back to where you left off. That is a community, which means that the transportation should be there, the banks and the easy accessibility to work and schools and post offices, and of course proper water supply, electricity and sewerage system, and so on and so forth. So when we are selling, if you are selling a 660 square feet of house for 3,300 rupees, which means that if you give away 500 rupees to the margin, then you're left with 2,800 rupees. And if you are going to, out of that 2,800 rupees, if you are going to allocate around 400 rupees FSI for the land cost, which means it roughly translates to around 2.5 crore rupees per acre of land, you are left with around 2,600 rupees. To 2,600 rupees per square feet, or around 13 to 14 lakhs rupees is left out. In that 13 to 14 lakhs rupees, we need to build all these amenities and livable place for the people. So that's a challenge. If somebody is able to crack that challenge, that means there is a $1 billion or multiple $1 billion industry waiting for them. As I said, there are 54 cities are waiting for to welcome the people. So, but when we are talking about this community, that we really have to understand how the urbanization happens in India or elsewhere in the world as well. India from 1995 onwards, we went into this explosive growth mode. If you look at the old cities like Bangalore, Pune, Bombay, Delhi, they were relatively very well planned. As the city grew, the city started growing in concentric circles, and it started engulfing on all other the satellite towns which were around the city, and they were connected by roads which went out of the city to farther places in a radial fashion. In all of that radial roads, you already have a small satellite town. So I actually, we did a survey where 4,000 people were surveyed, and it's a misnomer that these people are coming to the city every day. It is not. More than 70% of the people are dependent on the local economy. For example, if you take Bangalore, 28 kilometers is Nelamangala, and around 40 kilometers is Hoskote, and if you go to Dorballapur, 50 kilometers. So somewhere in between, on 26th and 27th kilometer is where the industries have been set up, and that is where the people and the city has already moved up to that the periphery that are really interesting, and that is where mostly the larger developers do not want to go. So that is where the opportunities are there. As we go forward, we will look at the models that how we can address this in terms of the land cost, in terms of building the community, what is the approach, and other things.
I would, when I come around back to you, Mallanna, I'm going to have you speak about two things. One is, what is required to be done? Is 16% margin the right number to have, or is it an absolute volume of margin that is relevant? What should be done if we have to resolve this issue? What can make them come around to actually developing? So I would have to think about this. I'm going to come around, and I would really like you to say, okay, if we do this, and this, we will find the supply side really getting geared up to provide the housing. So it's an interesting thought that I would like to hear your perspective on.
For sure.
Now I want to move to Ashish. Ashish, there are two dimensions we talked about. One is this whole dimension about the social side of it, namely communities, what should be present, and then what will really make their lives worth the while, right? So would you like to share us some views on that? Ashish, I think you're frozen. Okay, I think the line got disconnected. So maybe I'll... Ashish, you're back.
Yes.
Okay. We lost you briefly. Thank you for coming back.
Yes. Yeah, I'm trying to just basically get back. Just give me a second. Can you hear me clearly, or should I go off video?
No, we can hear you well.
Okay. So what I was going to say was on the social side, I think there's a whole phenomenal aspect of empowerment. When a person owns a house, I remember some of the first housing that we promoted in Ahmedabad, and interviewing many of the customers
Ashish, your voice is
and
getting
it's interesting. I
jumbled.
still remember
Do you mind going
one,
off the
but he
video
still
for a
felt
little
a
bit?
foreigner because. Sure, I'll do that. That's what I was thinking.
We'll try the voice without the video for a minute.
Yeah, is this
Thank
any
you.
better? So hopefully,
Yes.
so basically
Yes.
what he's told me, and I still remember that so vividly, he said, I'm no longer a foreigner. Now I have my own house. And it's interesting, when you look at them, especially in the larger cities, many of them live in slums or semi-slum areas, and they're always worried about the bad influence of the neighbors. When they come into a quote-unquote society, which is what a developer provides them, there is a feeling that I'm now part of the middle class. My children are with good peers. They will be motivated to study. So there's a very, very important part on the social aspect, which ownership of housing in formal society actually provides. So I don't want us to ever sort of undermine that. And that's, I think, an important point. Um, I actually did want to touch on a point which Jaime raised about the fact that when you have in London a limited supply of housing and you give additional money to the buyers, what it does is pushes up prices. But the key thing there is limited supply of housing. And what we've noticed in the Indian market, there have been many schemes where government has given support. Either the position and the location of the property is so bad, or what has happened is, again, when you have supply side constraints and you give the money to the developer eats up the pockets the subsidy, to be honest. So I think in a market like the US, which is much more of a free market, and when you actually provide incentives to developers, it leads to constructing a lot more housing. So that supply constraint is not there to that extent. You really see benefits going down because it is an efficient market. In a country like India, which is not an efficient market, I'm not sure giving a supply side benefit will actually help. In fact, I'd been in these discussions with the Ministry of Housing and Urban Poverty Elevation, where every developer, the large developers all said, I want more subsidy, I want more subsidy. When you give them the subsidy, the housing doesn't come. The people who are actually meeting the needs were the small developers. And I can actually show you examples of housing built. So I think it's a matter of where the constraint is and how efficient the market is for a particular subsidy scheme to work.
Yeah, I think the important point here is that there may not be really one solution. The problem is consisting of both the supply side and the demand side. So we need 1,000 flowers to bloom in order for the solution to be really resolved. So it's really an issue when we have limited supply and the incentives are given to the end users, end buyers, and that has the potential negative impact on the overall availability of the market. So when I come around to you, Ashish, do you think a regulation like the Real Estate Regulation Act, do you think that has got any possibility of really incentivizing the supply side and still be in control of making sure that the supplies actually come to the end consumers? So I'm going to kind of leave that question with you. I'm going to go back to Jaime. Jaime, you have written a nice book. Would you like to tell us what you've covered in that? And then using that, would you like to give us a few more pointers on this whole area of incentives? We spoke a little bit about the incentives to the end consumers, incentives to the developers, particularly the supply side. What's been successful in other markets?
Sure. And thank you for the opportunity. As I mentioned at the very beginning, like this is a big issue. And when I was doing initially some consulting for cities, I noticed that there is a lack of knowledge about what can be done. Like initially, the instinct of politicians would be like regulation on prices and things that really hurt the economy. So, I mean, in the book Affordable Housing Development, is the first book that has been written, like how to do development, affordable housing development from a developer's point of view. And we go through some institutional programs that we describe there. But when we go into the details of the LIHTC and the TIF programs in the United States. And what these programs do, like LIHTC, basically developers get like free money in the form of a tax credit from a corporation. So developers compete to get those tax credits. Those that get those tax credits is like free equity. They don't have to give this back. And this goes back to what Mallanna was saying in his last intervention. He was saying that at the end, the constraint is given by, the developer's constraint is given by the ability to pay by the household. So the household has a constraint, could be 30% of his monthly income, whatever it is. This is the constraint for the developer. The developer needs to get a return, which is the opportunity cost of capital, right? So in a competitive environment, developers like this goes back to opportunity cost of capital. Now, going back to what Ashish was saying, that what if the market is not competitive? What if you only have 2 developers in a country? Then of course, yes, the developer is gonna eat most of the subsidy, and the return is gonna be much higher than what is the opportunity cost of capital. So one proposal for regulators is to make sure that they introduce enough competition. Developers should compete for those tax credits in case of the LIHTC program. And also, I'm gonna now explain the other program, which is the tax increment financing. So the tax increment financing is a beautiful program. Basically, think about some vacant land can provide X amount of dollars every year, because through taxes to the municipality. Now, once you have a developer that builds their residential housing, like property tax base, like the tax revenues to the municipality increase maybe like 5 times. Okay, so the difference between what was the municipality got before and what the municipality gets now, it's called a tax increment. The municipality gets this tax increment every single year. So think about like this 23 years horizon, which is the horizon that is considered in the United States. So the municipality suddenly gets, for 23 years, this huge tax increment. So here the game is the municipality is going to give, say, 50% of the present value of those future cash flows, like tax revenues, today to the developer. The developer is going to keep paying the property taxes for the next 23 years. But today he gets a 50% of that present value rents today as kind of free money. So this is it's like another subsidy, right? But it's a subsidy that you create something out of nothing. And suddenly the developer sees his budget constraint going down. And what we do in the book, we also go through the developer's problem, financial feasibility problem, which what Mallanna explained really well. And I'm really happy that he, from a developer's point of view, he was able to say, this is our problem. They have to buy land, they have to buy materials, they do the development, they have some budget. They're gonna finance that with equity and debt. And they have to pay dividends to the equity investors. They have to pay interest to the lender, the bank, and then they're going to break even. They're going to set the rent per square meter, or the price per square meter, such that they are going to be able to cover basically the cash flows that they need to generate to pay debt and equity. So in the book, this is what we explain. But just to conclude, once you introduce those subsidies, which could be the LIHTC or the TIF programs, the developers might see his cost going down by 20%. He doesn't need to raise additional 20%. And then if in a competitive market, I insist on that, the price per square meter is going to go down. And we see this, and there are studies about that. This is very important. And just to comment on Ashish's point, and I'm done with this, Ashish was saying that the developers always want more. And that's true. That's true. And we need to have well-educated people that work, staff that work in the housing authority, that understands the developers' maths, right? They should understand the Excel that they do. And the same happens in the US, where they have like decades of experience with these programs. And I'm gonna just conclude with an example. There was a developer that wanted to build a luxurious hotel. And he applied for this TIF program. He applied for a subsidy. And he said, we need, say, I'm going to invent some numbers. We need $10 million. And the municipality said, no, sorry, we can only give you 5. And then he said, no, that's fine. 5 is good. That's what Ashish is saying. We have to provide only the amount of money that makes the project feasible at the opportunity cost of capital of the developer, not more. And to understand how much is that, you need well-trained staff that work in the housing authority that understands the cost of money, the opportunity cost of money, the interest rates for the bank, the dividends for the equity holders, and they should be able to screen the whole developer's project. This is really important. And what I saw in the United States is really well-trained people that know much more than developers do. And every day they go through different projects. So this is my proposal. In the book, of course, we go into the details. And when we did consulting for cities, this is something that we do and show with Excel, and there are very nice examples things that can be done.
Jaime, that's very, very interesting. Just a quick clarification. The tax increment financing, is it limited to developers who are giving their homes on rentals? Because the property taxes are getting paid by the consumers once they buy the apartment, right?
Yeah, it's for rental housing. That's correct. And basically, you have the municipality is gonna delimit an area. It's gonna say this is a tax increment district, because this is where they need housing. Because what Ashish was saying, we need good public schools, public transportation is walkable. There is no crime. It's a mixed income neighborhood, and then developers compete to build in those peak tax increment districts.
Unfortunately, in India, almost I would say no developer retains the dwelling units and do a rental business. As Ashish alluded to earlier, the rental yields in residential housing is anything between a 1.5% and a 3% on an average. The cost of capital is, at least depending on who you're asking, housing financing companies are talking about between 9 and 10% to the end consumer. The developers raise their money anything between 12 to 18%, depending on the financial situation and so on. Therefore, the yields do not at all support holding on to the asset and giving on rentals, at least as we speak right now in India. But that's a very interesting model. At some point, maybe this can become relevant. Before I go to Ashish, I want to turn to, thank you, Jaime. They were very powerful views. It'll be very nice if some of the papers that you have, we could send across the references to Ashish and Blue Circle and Mallanna. I'm sure Ashish has, he's at the policy level. People do consult him, and there are models that have worked elsewhere. And if he's, given the opportunity to know about them, he may be able to carry to the right people who can think about these avenues. So coming back to Mallanna, you did mention about the constraints that the developers look at when they are invited to participate in the, let's say, the middle income group and or the lower income group and the economically weaker sections. So in your opinion, what is it that can change the scenario?
Yeah, essentially, you're asking that why larger developers are not participating, even though you are saying it's a multiple $billion opportunity, Mallanna. Why is that they are not participating? That's, I think, that I'll take it as that.
Yes.
Sure. So let's look at it as Jaime was saying. It's the private capital is always looking for its returns. So if you're looking at the private equity money in real estate, it is a money that costs somewhere between 21 to 25% IRR on their investment, which means that that's really a very high return expectation after looking at all the business risk that gets into in an affordable housing situation, kind of construction situation. And then we have construction debt going anywhere between 12 to 13%, even that is high. So the cost of capital is very, very high, and the perception, and there is also a little bit of reality that the developers think that this business do not have enough margins for us to participate. They are right, and maybe there is a little bit of a different way to look at it. For example, the real estate development fraternity looks at it as, how am I going to do a business if I'm making 3 to 4 lakhs per unit as my margin? Whereas if I did a crore rupee apartment, I'm looking at 15 to 16 to 20 lakhs rupees of return on that apartment. And so, but if you look at a per square feet margin, and basically you are going to be making around 600 rupees, 650 rupees in affordable housing, and that's what you should be targeting for if you've really planned it that way. And maybe another 1,000 rupees per square feet is what the middle income group or affordable luxury that the developers fraternity wants to call it as. That's what they make it. So the first and foremost is the capital cost is very, very high. The second challenge that we have is that from the acquisition of land to the launch of the project, with all the regulations and approvals, it takes 1 year, which means that you are putting the capital to buy the land and then you're going to develop on that one. That 1 year is a really, really a difficult period for a developer because there is no money coming in, and whereas the cost of money is piling up, making the product expensive. And in the end of the day, it all gets loaded onto the product. And the other problem is that from the developer's perspective, that they think that they do not look at this affordable housing as affordable housing. It is seen as a low cost housing, which means that there is a brand perception. If a large, without taking any names, with a larger developer going into this one and somebody who is doing a villa for 3-4 crore rupees or $1 million, and if he says that I'm going to be doing this low cost housing, and then it is something that they are not geared up. So with the perception and with this kind of brand, this thing, I'm in my considered opinion that I don't think that there is a single developer who is a large developer in the country is equipped to be participating in this affordable housing opportunity. This has to be looked at in a very, very, very different fashion. And Ashish was mentioning some of the smaller developers are doing this one and they've done it successfully. So is the reason that so many millions or billions of rupees have already been given out as credit link subsidy to the people. That means there are already recipients who have taken the money, which means that they successfully have been built. Where is the problem then? The problem is really about scaling the business. The business has to be scaled up. If the business to be scaled up, what we need is a capital, this thing from, I'm going to be having an offline conversation with Ashish, with his Nuts Foundation, to see if there is any patient money available with an expectation of 15 to 16% return over 8, 10, 12 years. And, which is, well, if I have to take some names like the World Bank and the International Finance Corporation, IFC, and people like that, and if they are able to participate, then that would happen. Of course, they already have the money for affordable housing. The challenge for them is they only want to do the business with larger established developers and not the smaller developers or somebody like me who wants to get into doing this. So what happens with that is that now there is money available and there is a larger developer who does not want this money, and there is some customer or the end customer who wants the house, and that is not being built. So the approach to this has to be completely different from what it is. And maybe in your next question, I'll get into a little bit more details about.
Yeah, I think it's an interesting
industrial approach to construction, industrial approach to affordable housing rather than a real estate approach to affordable housing.
That's very interesting, Mallanna, industrial approach to making affordable houses as opposed to a real estate approach. So we'll come around to that. But from your perspective, cost of finance, land availability, government regulations, these are some of the biggest constraints. You are not saying it, but I would also say that the margin expectations are also an important element in this equation. So be it. I'm going to come around to you later. We have, just to kind of mark timing, we have got about 24 more minutes, and we might open up some questions to some of the audiences who have already sent in some questions. We'll come to that. But I'm going to go to Ashish for one round. Ashish, if you look at whatever we are hearing in terms of the Pradhan Mantri Awas Yojana, just to give the statistics as of this morning, there are 48 lakh units, 4.8 million units have been completed. 11.3 million units have been sanctioned. That's what I understand from the government's website. This translates to something like 1.81 lakh crore rupees, which I think is approximately $26 billion, have been given out in terms of subsidy or subsidy equivalent, committed rather, in the last 6 years. This was launched in June 2015. So in the last 6 years, about $26 billion approximately, give or take, is the amount of subsidy that has been committed. Now, looking at the totality of the problem, supply side, this is only addressing the buyer side, right? From a solving the demand supply gap perspective, do you think this scheme has got enough wings to really achieve the housing for all objective by 2022? Or even 2020, forget about 2022, take 2025 or 2030. What's your?
I was laughing when you said 2022. I was saying, how long does it take to make a house? How many houses do we need? So that's what I know you need to answer. So let me get back to the more fundamental.
Statement, right? Yeah.
So let me be more fundamental. I think first of all, the PMAY scheme, there's a combination of rural and urban. And the rural part actually is working decently, although you could say that the people who finally land up getting it are the middle income in rural, and also the right, you got to belong to the right community to actually get it. You see the Dalits and the minorities getting less of it than which is normal, which is where the influence power structures are. But I actually want to pick up on a couple of points that Mallanna made and Jaime made. I totally agree with Mallanna that big developers are not going to understand this. They have certain, not only margin expectations, and you can argue whether it's 16 or 16, but there is also volume expectation. So if I'm going to host hotel, which I completely agree with Mallanna, there's a group of people living out there who are working out there. It's a natural place for low income housing. But if I'm a large developer and I'm making, even if I'm making 20% return on a 3 lakh house, that's 60,000 rupees, I want at least 1,000 units. If I don't get 6 crores, it's not worth it for me. So that just puts that whole market out of the range. Forget about the brand point, which is also very honest. So I think there is a fundamental rethinking of this, of saying who's the right developer and what's the right model. I'm very intrigued to hear your points about the industrial model, so I'll wait for that. I want to touch on 2 other things very quickly. One is the whole point of creative financing. I think what Jaime is talking about, recognizing the long-term value of housing, therefore the tax benefit, that is standard in the US. And that's basically where the entire rental market has been subsidized. There are variations of that. So the most simple variation that is the FSI. I'm making up money. When I change your FSI, I suddenly generate value in the most important part of town. And that's where the slum housing in India, in the urban areas like Bombay, etc., has become monetizable because I've just changed the FSI. So these are the ways in which government can be very creative about building it. But I want to just get for a minute to the third topic, which is land. End of the day, it's land, whether it's FSI, whether it's cost. And one of the interesting things is we did a study of land in Ahmedabad when we were working. And we said, what if low-income house in Ahmedabad had to be given a 450 square foot house? How much land would you need? Guess. And I'm talking of inside the ring road of Ahmedabad. So not very far away, but not completely in the heart of the city. It's about a 15-kilometer radius. You need 2% of the land. You look at any satellite photograph of Ahmedabad, there is tons of it. The problem is we have a fundamental issue with holding of land. And the value of land keeps going up, so there is no incentive to sell. If tomorrow we were to do what Jaime said and said land which has actually got urban development rights, it may still technically be agricultural, but it can be used for urban. The value of that land to the city is huge. If we put a small tax on it and said, if you're not using it, sorry, give it to somebody else who should be using it. If we started a land tax on unbuilt land, you would change the face of this country.
That's really powerful. That looks like one solid point of intervention that the government can possibly think about in making the supply side of the issue at least reduce, if not go away, right? So that is
what it will do is it will also increase the revenues for the city, which allows it to invest in all the rental housing that Jaime is talking of in the US. Quite familiar with that space, is because the city is subsidizing the customer. The city is providing it to the customer in rental housing at very low cost. Whether it's council housing in the UK or it's low income housing in the US.
Thank you, Bim. That's very nice. Jaime, there is one question I want to ask you is that you heard the situation in India and you had conversations that Mallanna is talking about the high cost of capital. From listening to all this, do you have any particular viewpoint or a suggestion as to what could be done to bring the cost of capital to the developers? Let's say there is an addressable point regarding the land. Let's say that there is a profit element, which when you're going to hear Mallanna's view about how it can be considered as an industrial project. Let's say the profit element is also managed. But the cost of capital times the duration that it takes for the permissions is together one incidence of cost for the developers. So do you have any wild ideas that a government could do in order to make that a lesser burden on the developer side?
Sure, it's really important question. It goes directly to the developers' financial feasibility problem. So basically, cost of capital varies. We know that the more secure is the investment, the lower is the interest rate, the lower is the cost of capital. We know that the capital structure in real estate development, they may have multiple investors. So one, I mean, I'm gonna just enumerate the typical ones. Is you have senior debt, you also have preferred equity, then you have the capital partner equity, and also the entrepreneurial partner equity. This is the typical capital structure. So senior debt, assuming there is only one type of debt, if there is default, because I mean, there is not enough revenues to pay for that, the bank is gonna say is the collateral, which is basically the building itself, and is gonna sell it at market prices, and equity is gonna lose everything. So that's why the price of debt it's lower than equity. Equity is riskier because in the waterfall that we basically do, and what developers should be doing a waterfall, which basically have the cash flows that after the pro forma, you have some cash flows that go first to pay debt and then equity, given the different seniority levels. The equity might receive, depending on how risky it is in terms of receiving that money every single year in terms of operating cash flows, they may have higher or lower risk. So now, going back to your question, what can we do to alleviate the developers' cost of capital? So in terms of senior debt, there might be what we call a loan to value, LTV constraint. It can be market-based because the market dictates that this is kind of the average LTV, or it could be dictated by the government in terms of avoiding huge leverage in the economy. So the question goes more like, assuming whatever is the senior debt, there might be a funding gap. The funding gap is like the developers, once they have this funding gap, say, I need an extra $5 million. This is when they get desperate, and the cost of capital really goes up, because this is equity and it's really expensive equity. This is where the government, the municipality can enter, the local government, and they can cover this funding gap. Also, like nonprofit institutions. We did when I was in Madison, Wisconsin, we did such a collaboration, this public-private collaboration, where there was a nonprofit organization, very big one in the States, that they put $50 million to buy, basically to cover these funding gaps of houses that each house was, the cost was $250,000. So if you are able to provide the money to cover the funding gap, you alleviate enormously the cost of capital to a developer. And I mean, what Mallanna was saying, that developers cannot do like non-profit developments, is true, because they depend on capital. I mean, they have to raise the money and to give back the money, and the money goes to the best use. So if we really want to make affordable housing development, we have to play with we have to say it is a market-based economy. We have to compete for the money, but there are ways that we want to reduce prices through the correct subsidies in case we want to introduce the government into all this picture. So this is my view. This is basically what I've been working a lot. Just to conclude, the general attitude towards alleviating affordable housing is developers say we want more land. And of course, this is true, but sometimes land is not available in places that is scarce. people like politicians that try to defend the households, they say we want to give them money, but we know that this is not helping. This is going to increase prices. Or politicians say we want to put a cap on rents, and at the end, if you want, I can develop on this. But at the end, it has the opposite effect, like rents go up or house prices go up. Because such a constraint on prices, you are distorting so much the market, and you like some units go out of the market, supply goes down, people go some other areas, demand for those areas goes up, prices go up. So it's understanding the market is not so intuitive, and that's why I'm so much emphasizing that we have to open the black box of a developer's cost of capital structure and look at the cost of capital.
That's very useful. Thank you very much, Jaime. So, gentlemen, we got about 13 more minutes, and I'm going to be going around possibly a couple of questions to each of you. There also are questions that have come from some of the audience. There are a couple of people in the audience who do want to raise questions. So I'm going to be going around. From now on, we will be able to afford very short and quick answers. So I'm going to go to Mallanna first. There's a gentleman called Subin Irikala, head of design housing.com. His question is how the institutional players like Oyo Life, Coho, Nestaway, etc. can contribute or help the affordable housing, given that their normal market might have shortened due to the pandemic scare. When I say affordable housing in context with community living players is of creating new value proposition for the segment, maybe for a mid-short term period until the pandemic effect gets completely alleviates. I think you've kind of been talking around this in some ways, pandemic or no pandemic, you've been talking about the overall economics. However, this is a question from Mr. Subin Idikola. And there's also one specific question. I'm not sure that we will have answers in this forum. Suhas Patil is the managing partner of a Sankalp Construction Group, is asking, what are the initiatives in Pune with respect to affordable housing segment? And there is another question, Mukul Gupta, proprietor AMG Consulting. I'm interested to hear from industry leaders about during pandemic and post-pandemic strategies for affordable housing in terms of supply, demand, and financing opportunities. So, Mr. Mallanna, I'm going to put all these questions to you, but I think this is generally the kind of conversation that we've been already having. Please answer this to the extent you can. Plus, very quickly, if you can explain in a minute, what did you have in mind in terms of considering the affordable housing for the developers from an industrial project perspective as opposed to real estate project? So if you can quickly cover these two things, I would like to then move on to the next questions. Thank you. You're on mute, Mallanna.
Sorry about that. That's another 15 seconds. So basically, when we say industrial method, basically we are saying that market to the product. That means the market requires certain way of a certain product, and you build that product and supply it, rather than a land parcel deciding what product will go to the market. Which means that we know that the development will be the 2-bedroom apartment will be around 600 square feet, and the single bedroom apartment will be 300 square feet. So what you will do is that you will do a modular designing. A modular designing is that a floor which is going to have a central core on either side, that you're going to have 3 or 4 apartments, and all of them are same, and the same thing is repeated 3 times or 4 times, ground plus 3 or ground plus 4. You will not build more than ground plus 3 or ground plus 4, and that is one building, and that one building is like a digital printing, and you print that building across in a land of 20 to 25 acres, build 1 to 1.5 million square feet, 1,500 to 1,600 houses, where you can build a community which consists of all school and any other amenities that are required. Basically, that you should know where your customers are, rather than the way the real estate development is working. That is, we launch a project and we go to the market and look for the customers across the world. In affordable housing, in a 6 to 8 kilometer radius, if your customers are not there, then it is not a place for affordable housing. So that's a very given thing, so that we need to look at that. And also that basically the modular construction will give opportunity to repeat. That means that you repeat the same thing over and over again in different sites, and from that is what in the modularity leads to repeatability leads to portability. The same idea, once you're designing and repeating it, which means that you've taken away the inefficiencies. You're going to get into the cost elemental analysis like the way the industrialists do, rather than every new project is a new invention in the real estate development currently. So that's what I meant in a very short this thing about affordable housing with an approach as industrial development. With regards to pandemic, it's once in a lifetime or once in 10 lifetime. This is the situation and nobody was prepared for it. And I don't think that I've got an answer for a OYO or a housing.com kind of a player, what they can do. And I think that, I don't have an answer for that. Let me stop it at that. So I don't know what was the third question.
I think, is it fair to say that a pandemic has, if anything, made the developers dig in deeper into the market segments that they've already been present? Is it fair to say that pandemic has not driven the developers to go look for newer ventures like the 20 lakh houses? Let me make a 10,000 of them. Is that fair to say?
It's fair to say that actually the pandemic, once after it slowed down a little bit, in the middle income and the affordable luxury segment, the market has actually picked up, because this working from home, and particularly in Bangalore, has picked up quite a bit of interest, and people think that they want to own a house at this point of time. So there is a demand that has come back, and maybe that there will be the larger developers concentration will be much more as the offices have slowed down a little bit, and it will be on that higher income and luxury, and they may not look at the affordable housing for a considerable amount of time.
So in other words, the pandemic left the developers with having to be concerned about their existing business, first of all. Second is, if anything, the markets for the traditional segments are coming back. So it only makes them get a reinforced attention to the segment that they are already familiar with. In other words, pandemic has not smoked the developers out of their comfort zone into a 20 lakh less kind of a market segment. It's fair to say, right? Okay, that is very good. I think the whole idea of your industrial viewpoint to affordable housing is very interesting. I would say that this actually puts the total margin basket conversation as opposed to per piece margin conversation, and then really going into places like you're absolutely right. And industries have not been put in the city centers. They've been put in outside areas. So I think it's a very good viewpoint. I really appreciate that. So we got another 7 minutes. What I'm going to do is I'm going to leave each one of you with one question. Feel free to address it the way that you feel. And if you have anything else to add to the respected audience who have been intently and patiently listening for the last an hour and 20 minutes, I shall be very obliged. The question I have is like this. In your opinion, what are the top 2 constraints in providing housing for all? In this question, who should be doing what? It is possible that you've actually touched upon the answers to these questions in your own conversations. But it'll be nice if you can articulate it as answers to this question as a sort of a summary for our audience. So can I go first with Ashish?
So I think the 2 points I would raise is, first of all, the cost of capital, which has been raised now by Mallanna, by Jaime, by everyone. And there's no question that is a key issue for the small developer actually getting it. I'm talking the small developer, not the large developer. They're actually literally buying cement on credit. So the cost they're paying you is the 20-24%. So I think if something could be done there, and maybe the player who has to do this government, it has to give some kind of first loss guarantee or some kind of use it as PSL, and therefore incentivize banks to actually give money to this part of the market. That's one thing. The second thing I think is going back to land. If we free up a lot of land, you'll see a lot more activity. And there, where I earlier said that you actually tax land which is already in urban areas but not yet constructed.
Thank you, Ashish. That's very useful. That's very useful. Jaime, you got some comments to add?
Yeah, again, I agree. It's in the line that we discussed before. I would highlight the supply-based programs that facilitate development for developers. So basically, they make the financial feasibility constraint laxer. I think for that, we need not only developers like well-educated, but also we need to educate staff at the housing authorities across countries. It's really important to implement those subsidies in a successful way. And it's not a trivial issue. We need to educate them in terms of the financing, working with Excel models, laying down the waterfall, the same as developers doing their analysis. And then I think the second constraint I would highlight is the ignorance and ignoring like results that we already know that have failed. There are policies such as rent control and vouchers that are very well intentioned, but they have the opposite results. And we all want to help the very poor. We all want, and we have to be smart and look at what has been done and those experiments in other countries. So my summary, I would say, lots of education in terms of financial literacy and those models like real estate finance itself. And number two, bring like the big picture to the people that really make decisions. And I appreciate like you guys making this event. It is extraordinary, and this is a step towards achieving those hopefully results.
Thank you, Jaime. Mallanna, you have the last word on this matter.
So I'll just go into a little bit of a nuts and bolt of this one. GST, we are charging 1% to the customer in affordable housing, 1% to the customer, whereas for the input on our 12 lakhs or 13 lakhs rupees per house, we spend around 18%. 18% translate to 2 lakhs rupees of GST on a house, and whereas we're getting a subsidy of 2.67, so it is kind of a little bit of no man's this thing. So GST must be brought down to 1% or even less than 1%. And townships that are built under PMAY, the approval cost should be brought to minimum. We are currently spending around 80 to 90 rupees, which is a large sum of money for an affordable housing. Unless environmentally difficult land, the lands which are in the outskirts must be given, the land use must be given to the affordable housing without much of a hassle. And the last thing that I have is stop the plotted development. There are hundreds and thousands of acres of plotted development have been done in Bangalore, around Bangalore for the last 15-20 years, with only 10% of the people building the houses, which means that they took away very valuable land for affordable housing or mass housing, which is not available. So last thing, the state governments can bring down the stamp duty to nothing or very nominal, so that is also a benefit that goes to the customer. And these are some of my
very good, very thought out points, Mallanna. Thank you very much for them. So dear participants, thank you very much for patiently listening. I think it's been a very interesting session. I personally have learned a lot from this particular interaction today. I think Ashish kind of broke down the market segments into the HIG, LIG, and EWS segments, and he was very right in articulating the HIG segment is very well catered to right now. It's a question of LIG. There is definitely in the realm of affordability and viability, but in the case of EWS is where the real issues are there. And he also beautifully brought out the fact that for the buyers, particularly for the non-formal sector workers, financing has stopped being, or at least reduced being, a big issue, as evidenced by more than $5 billion of money being given. And we heard Jaime talk about various models whereby at a macroeconomic level, at country level, actions have been taken in different countries and how they have varying impacts in actually making the housing possible. In terms of the definition of the issue, we're talking about affordability means 30 to 40% of a person's income. If people are able to come up with a solution to be able to give the housing that kind of a price point on a 20-year term we are talking about, we think that we have the dimensions of what could be a solution. Here is the paradox. The paradox is that there are millions of people who need homes. India is a highly land-rich country. There is no dearth of developers who can churn out thousands and thousands of dwellings in a time-bound manner. There really is no problem for money availability. I think we are at a situation where we have to get to a point where there is a magic formula that can be created, which ties all these things together, and by a magic, the problem gets solved, and the millions of people who don't have a home of their own do get to enjoy a home of their own. I think this is a topic cannot be resolved in one webinar, but something that all you thought leaders have really added to the conversation around this, the narrative around this. I'm sure that soon enough, there will be workable formulae that will come out. Each one has got a certain responsibility. We cannot miss out appreciating the government for taking some steps in this direction and making it easy for the really poor people to buy. But it requires many more stakeholders to act in unison to be able to resolve this issue. With this, I want to thank Ashish, Jaime, and Mallanna very, very much for taking out your time and really thinking through and offering a phenomenal amount of insight to the audience. Thank you very much. I now hand it over to Siddharth.
Thank you very much, sirs. Such an insightful discussion. Our leaders and we took home a lot from today's conversation. Thank you very much for your time and how well moderated, Mr. Raghavan. Thank you very much. And thank you to our leaders for staying in the audience till the end and for sharing excellent questions. Along with our webinar series, we will soon be taking these discussions to our exclusive digital mobile app, which we're curating specifically for senior leaders. We're sending out invitations to leaders across our 6 sectors, which are real estate, healthcare, energy, e-mobility, logistics, aerospace, and defense. So whether you would like to engage with us on the platform or as learners, please write to us to connect for membership for the real estate circle and also get access to the other allied circles which we're also building. So thank you very much, sirs, once again. We look forward to having such conversations in the future.
Thank you once again, everybody. Bye-bye.
Thank you.
Thank you.